Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 30th, 2025, and we're diving into Trane Technologies' latest earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Trane Technologies, a global climate innovator, has just released its second quarter 2025 earnings report, and there's a lot to unpack, from record bookings to raised full-year guidance.
Revenue and profitability overview. Let's start with the top line. Trane Technologies reported net revenues of $5.75 billion for Q2 2025, an 8% increase from last year. John, how does this reflect on their profitability?
Trane Technologies has shown impressive profitability with an adjusted EPS of 3.88, up 18% from the previous year. Their GAAP operating margin also improved to 20.3%, indicating strong operational efficiency and effective cost management.
That's quite a performance. What factors contributed to this growth?
The growth was driven by strong volume growth, positive price realization, and productivity improvements, which more than offset inflationary pressures. Their strategic focus on high-demand segments like commercial HVAC also played a crucial role.
Segment performance and strategic initiatives. John, can you break down the performance across different segments?
Absolutely. The Americas segment led the charge with bookings up 8% to $4.54 billion, driven by a 20% increase in commercial HVAC demand. In EMEA, revenues grew by 10%, aided by foreign exchange and acquisitions. However, Asia-Pacific faced challenges with a 7% decline in revenues due to lower volumes and inflation.
How is Trane Technologies addressing these regional disparities?
They're focusing on innovation and sustainable solutions, particularly in the Americas, where demand for bespoke applied solutions is strong. In Asia-Pacific, they're reinvesting in business operations to counteract the volume decline and inflation.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $3.76 for this quarter. How did Trane Technologies perform against these expectations?
Trane Technologies exceeded expectations with an adjusted EPS of 3.88, surpassing the forecast by 12 cents. This 18% growth in EPS highlights their strong financial management and operational efficiency.
What does this mean for investors?
Beating the EPS forecast is a positive signal for investors, indicating robust financial health and the potential for continued growth, especially with their raised full-year guidance.
Future outlook and company guidance. Looking ahead, what guidance has Trane Technologies provided for the rest of the year?
They've raised their full-year revenue growth expectation to 9% and adjusted EPS guidance to 13.05 cents. With a backlog of $7.1 billion and strategic capital deployment of $1.8 billion, they are well-positioned for sustained growth.
And what are the key drivers for this optimistic outlook?
Their strong backlog, particularly in commercial HVAC, and continued innovation in sustainable solutions are key drivers. Additionally, their strategic capital allocation, including share repurchases and dividends, supports long-term shareholder value.
Key takeaways. In summary, Trane Technologies has delivered a strong quarter with significant revenue and EPS growth exceeding analyst expectations. Their strategic initiatives and raised guidance paint a promising picture for the future. John, any final thoughts?
Trane Technologies is demonstrating strong operational performance and strategic foresight. Their focus on innovation and sustainability, coupled with robust financial management, makes them a compelling investment prospect.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Trane Technologies' performance in the comments below.